Okay, all right, all right, all right. Today was a very, very good day. Let's see how we started. Do a little replay. Started around 6 o'clock. Okay, so from the moment we sit down, if we're in here, we see that we had a few times rejecting this breakaway gap. It seems to be getting lower. If it comes back in here, I'm definitely looking to reject that if I'm trading at all. And we invert it. Okay. But if you stay in, it looks very good. You can be up a few points. Let's see. I'd wait for the rejection confirmed. Probably in maybe around here-ish. 416, still some good money. Create a new breakaway gap. Still in this. If you're coming in late, 7 o'clock, might try to tap that down to there. Scalp. That would be a reasonable. Yep. Then let's see, maybe even stay in and see what happens, but I'd probably want to scalp it, see if we retap and maybe get in for another scalp. Okay, let's see. Inverted. This looks to be holding strong area. Playing this properly. We get ourselves a nice little intermediate high. Sorry, this actually turns into a long-term high. If you could get in there, what reason do you have to suggest the turnoff? Well, you have the rejection of this breakaway gap. Short-term high, put a stop there. Boom. Comes down. Short-term highs. Doesn't. The intermediate term high does not come down here. Doesn't even try to test it. I would start getting squirrely around here, to be honest, because this intermediate term high passed this intermediate term high, which would suggest that I'm probably looking to get out as soon as possible. Honestly, I'd probably look at this, trail it really, really close, probably even get stopped. Yeah. If I had the patience, well, I wouldn't have moved my stop. Either I scalp this, which is reasonable, about 40 points or so, maybe 30 something. Or if you can take it up here, hope for that. Maybe you take it here and try to get the run back down, but dodgy. So maybe if you're just in it, you try to hold it, and if you just put it slightly in profit, just in case. So, actually, no. We said we were here. Yeah, so then you just leave it there. No, if I put it in profit, then you're not in. Doesn't matter. So just leave it, structure. What's the stop loss on this anyway? How much are we risking? 354 to about 7 points. I'd leave it alone. And then it runs up there. You get a nice little 40, 45 points out of that. Definitely quick rejection. Look to get out there. Trail it maybe here, actually, 396, which is reasonable. Huge rejection if you're not already in there. Take that all the way down. Oh my goodness. Wow. If you're not in that, you make sure you get in that, because the rejection of the breakaway block with this wick rejection, no interest in even trying to come back to test it. Man, actually beautiful. You get in somewhere around here, let's say. What are you looking at? 395, 60 points. You might even take this just the previous day's high. But if you want to trail it and see what happens, because you created a nice breakaway gap, you have to see how that gets treated. Okay. Oh, yes. Isn't that beautiful? Comes up, creates a new intermediate term high. If you're not already in it, it would be reasonable to test. It would be reasonable to test this breakaway gap, see how it treats it. 1, 2, 3, fall. Probably in that one, especially by the time you get to here. Put your stop just above the intermediate term high, which is here, 342. Where's your, so you're here. pretty big. Well, 19. It's not ideal, but I mean, it falls so energetically, and even through this prior first presented fair value gap, definitely have some movement. And then all the way down to here, if you're in, let's say here, 345, you already made about 15 points. Let's see, you've eclipsed this. Your sights are either on this area here or this first presented fair value gap to see what happens. Oh, rejects this area here. I think this is a bullish breakaway. Comes back. I would see if it comes back here to the short-term high. Test that. Does it? It doesn't even print past. It waffles. Oh, it does. It does. It creates an intermediate term high, and then it creates another intermediate term high, and both of those are. So honestly, because I know that these are intermediate term highs at this point, I would look to maybe exit around here. So you take that from here, forward to here. Whoa, really? That's almost basically a 100-point move right there. Nice. Pre-market, I love it. And this is after news, so you have a data sweep here. Well, you don't even have the data sweep, honestly. You just create the data candle, so you still have some good areas to return to if you want to come back up here. If you're thinking bullish later in the day, but for now, seeing this massive breakaway gap here, and did I flip the fib? Flip the fib. All right. And now, what are our confluences? Well, we seem to be rejecting the 786. Flip the fib. It flipped the fib because. Why did we flip the fib? We flipped the fib because Sydney Tokyo was heading up. We turned that around because we broke out of the 1, we broke out of the range, flipped it, came down here, respected. I honestly thought it was going to come up here. It did not. Created a nice bearish order block, plummets immediately. I was thinking it should come here to test this first presented fair value gap, or at least this. We immediately reject. So that tells me that maybe it's useful for me to watch the candle structure better, rather than watch the candle structure and get in off of that, rather than try to set pending orders where I can. But sometimes that works, sometimes it doesn't. I guess it's better to be in the trade than not. Having said that, I always could have put a stop above it while making sure I'm in the trade. It plummets right past this prior first presented fair value gap, rejects the yesterday's first presented fair value gap of this session, creates a new first presented fair value gap for this session right below prior first presented fair value gap for the day, and honestly comes right down. First of all, if we're looking at the candle structure here, we see we already printed past 50%, but even the first candle printed inside. This is a very bullish sign. Sorry, this is a very bearish sign. Create the breakaway gap, and this says to me that right here, if you're not already in, it would, if it's showing signs of coming back down, you get in that immediately. Put your stop in structure. It's still a large stop to 62. Well, still a large stop, but at the same time, there's so much risk to reward. This is very bearish. It came back to test this first presented fair value gap, and it creates a new. Oh, hold on. Is this? No. This is okay. This is not a wick override. So this this is the first presented fair value gap of the New York session. Creates, comes back to test it. I'm only thinking bearish at this point. I've already closed past 50, the consequent encroachment of the opening range gap. So I'm thinking very bearish, even though it rejected 62.5. It's just a healthy retracement, definitely going back down. Whoa, came back all the way up here. It printed past the 25%, which definitely concerned me. But we also see that the intermediate term high that it created only tapped into the breakaway gap, the bearish breakaway gap, just to open the range. Didn't even come back to test the intermediate term high here. Definitely still thinking bearish. Honestly, if you were in, let's say, here-ish, 258, you made it to your 50. You still got a nice 52 points out of that. If you keep going, you're almost even at 100. Let's see what happens after this. And you keep falling with authority, energetically. You can definitely get your 100 and call it a day if you want, but you can also keep following and see what happens. So, it comes back trying to test the bottom of the gap, and then it breaks through to this breakaway gap. Let's see what happens here. I'm looking to see if we create another short-term high that tests this one. Touch and go, because it could go either way. But my understanding, this is a lower low and this is a lower low, means that this short-term low eclipsed that intermediate term low. I have no reason to suggest that we're thinking bearish. I also see the turnaround here. This peak here is much lower than this peak. Thinking bearish, especially with the turnaround here. If I didn't have this candle were a little bit higher, I would have been more concerned. But this is following the trajectory that I'd like to see. Okay, short-term high, no eclipsing. So I see we're struggling here at this prior first presented fair value gap. And we break through, reject the bottom of the opening range gap, which is concerning to me because it means that we're now creating an intermediate term low that is higher than the prior intermediate term low. I would like to see it further south, but I also see that we have a new intermediate term high that's lower than the prior intermediate term high, which definitely makes me happier. Let's see. Okay, and we eclipse this intermediate term high, which is extremely concerning for me. Honestly, I'd probably look to be out as soon as possible. Yeah, we came back up to this first presented fair value gap. I don't like this. I would like to have been out by now. Especially if I got my 100-pointer, I might have taken it down here just because I see how hard we rejected this area. I would look either for the reversal for a long, which honestly I'm not sure that I would have liked, but I might have gotten out somewhere around here after the reversal and then looked for a re-entry for a short somewhere around this optimal trade entry area. It's not an ideal trade, especially considering I don't like the risk to reward, and I was already in this trade since here. I think I would have done well at 258 to, yeah, that's some good money right there. I would have been really happy with that. 170, almost 170 points. Okay, yeah, I would have watched this one. The intermediate term low being higher definitely concerns me. Print inside the box plus higher rejection of the gap, print through the gap. I'm watching at this point, see if there's anything I'd like to see. I am starting to reverse my position to be more bullish, considering that we broke our intermediate term high here. And we reject this area here, which is extremely interesting to me. I would look to see maybe if we come back up to test it. If not, I see, actually I do have a short-term high here. 49. I would not feel uncomfortable testing this 49 for a short. Why would I feel comfortable doing that for a short? I don't feel comfortable doing that. Well, I could take it for a quick short just down to here to see how it treats this bullish order block, because it is rejecting this first presented fair value gap, and I'm not getting any real movement. I get prints outside of this fair value gap, candle prints, but they are struggling mightily, which indicates to me that we're thinking bearish at this point. And I would have been wrong. I would have been stopped out right there. Okay. And it comes right back. Are we going to invert? Okay. It continues up. So I would have been out of that one. I would have been right to think bullish, and I would have been wrong to think bearish. So that would have been a bad trade. That's a lesson learned right there. This creates a long-term high, which gets invalidated by an eclipsing of not only this intermediate term high, but also this long-term high. So we're testing this prior first presented fair value gap plus this area, this breakaway gap that was previously rejected, that previously served as a rejection, a bearish rejection area or entry point. Let's see what happens here. We're above true week open. We already took London high. Well, we had already taken London high. We were above it since market open. So okay, let's see. I would see how this is treated. It's a short-term high. Do I have one here? Yes, I do. Okay. And we'll look for a rejection. There's no rejection. It actually continues to the upside. So at this point, I should be thinking longs. The best I could have done for a long entry would have been here with a stop loss here, which I absolutely would not have liked. So I would have watched this run away without me. Maybe. Nope. I have no interest in getting in this. I have no interest in this trade, to be honest. This is just not my bread and butter. This is a nice move, but I have no reason to be in this trade. Not according to my strategy. Not according to my current strategy. That's just gambling. I'm not doing that. Having said that, I do see a short-term high. I'd like to see it come back up a little bit and not fall too aggressively. Okay, I like that. Intermediate term high, which means that this created a short-term high. And when it came back up here, I would be interested in seeing if I can get in for a 38 to 9-point stop loss. I would definitely test that. And I'd be in profit for a bit. Let's see. I could take that, see how it treats the opening range box. Let me see. I do have my concerns about this trade, considering the fact that this short-term high eclipsed the high of this intermediate high. The thing is, it did not have a body closure past it, so I'd probably say maybe we're okay there. But I'd still trail it. I'd still watch it. Maybe move my stop into structure into profit just in case. Although I do see this bearish order block here, which is extremely interesting to me. So maybe I just keep my stop around previous day high, or I just leave it in structure, to be honest. And it would stop me out. So that would be a loss. That's the reason why you don't gamble on things like that. That would be a bad trade. Okay. Or a good trade if you take it and then you get out as it rejects the opening range gap. So that's not a bad idea, actually. I'll take that back. So here, get out as it rejects the opening range gap. And how much do you get out of that? Let's say you get it from, what I say, around here-ish, 336. It's a nice little scalp. 50 points, not bad at all. if you watch the candle structure properly and get out at a reasonable place. You could take the rejection of the gap up. There is an opportunity here with a short-term low, lower than this intermediate term low. There's definitely an opportunity to take that. Actually, so maybe you'd probably get in some around here with your stop there. So 297, take that up to the previous week's high tap. I like that. Grab that liquidity. That's pretty decent. That is pretty decent. Get that for 298. That's not bad at all. That is absolutely, that's an amazing trade. That's the 80-point trade. If you can do this properly. Okay, I like that. What else? Okay, and then it falls. You got your short-term high here. Maybe you get in here. That's a large risk to reward, but I like it. I like it a lot. It's got these 3 consecutive rejections, strong rejection. It starts to fall more. This is a strong sign of a sweep of the previous week's high with the wicks. Everything looks beautiful here. You even have a change of character. I think this would be change of character. Yeah, let's call it change of character. Comes back here with the sweep of the previous day high on the way down, and you reject the box. Doesn't even come close. I would watch it just to see. Maybe I'll move my stop in just into profit because it's printing now above the previous day's high, which I'm not a fan of, to be honest. And if I didn't do that, it would stop me out. So, moral of the story is take your profit, especially since you created. Okay, I see what's going on here. You created a higher low. Your intermediate term low is higher than your prior intermediate term low, which turned into a long-term low. So you're definitely looking to get out of here because look how you rejected the box. So you're getting out of this. There's no reason to stay in this trade once you hit here. Once you hit here, and then you see what's happening with this candle, you are out. You are out of this trade. You can't even make it down to the gap. This is a bullish sign if I ever saw one. In fact, you might even get in for the get up. So what does that mean? That means that the sweep of the previous week's high failed. So it was a nice scalp. Definitely get back in if you feel comfortable. And it runs. It really does run. This is noon already, so I don't know if I'm trading at noon, but we did well. We definitely did well. We made it all the way through the opening range gap, completed it. What else did we do? We made more points than I can count. I'll have to tally it up later. Another day, maybe even. I don't know. Well, maybe I'll put it in the comments section based on the trades that I would have taken or I see. All right, so even this trade, which I won't count because this is noon. I'm not. This would be really nice. This is the golden trade right here. Let's say you get in here, 320, and you see the turnaround here. It's a nice 109-point trade if you can get it properly. I mean, if you can really get it, 111 if you know what you're doing. But let that keep going just to see. Oh, and it keeps going because it rejects this breakaway gap here. That is very nice to see. You like to see that. Okay. Rejection. Honestly, there's no real reason to get out of this trade. You might even, honestly, if you want, what you could do if you're reading this properly, because you see how it rejects this. If you want to run away with your profit, you just run away with your profit. But another way to do this would be to trail the intermediate term longs. Let's try that again. Trail the intermediate term lows. So you move your stop from here after you get in here. Move your stop from here to here. And it doesn't look as sexy, but at the same time, you're in profit. and you're looking to come back down. No, you're going up more. Now you can move your stop. Let's see. Move your stop to here. Behind this is a nice area right here. Got a heavy breakaway gap, clear rejection, 3 rejections already, and a move away with energy, creating all-time highs. Oh, this would be a nice trade. Such a nice trade. 115. Oh yeah, I like this a lot. Oh yeah. Okay. All right. Well, now we're looking to turn around. So like I said, you should move your stop here, and this is where you'd be kicked out of the trade, unless you want to try to get out around here with these all-time highs, or read the candle structure. Maybe you want to follow that by 3 candles, depending on what you want to do. You tapped all-time highs, you made new all-time highs, and then you just clearly turning around, creating the first presented fair value gap of the 1:30 session. Tested a few times. This would be reason I would feel comfortable getting in the trade, either here or at the very least here. This is a great time to get into this trade if you're not already in it, because you create the breakaway gap after the prior breakaway gap, plus the first presented fair value gap is inverted. You are looking for a nice little fall, and that would take me out. Never mind. Okay. That's too bad. But, I could have read that better. Let's see. Intermediate term high. Honestly, I probably would have gotten in this trade, intermediate term high, creation of the inversion. I'd probably be in from here, because I have all these short-term highs that look like they're moving lower. I might have been able to get away with not taking a loss, maybe moving myself into profit. Maybe I'd have to think about that. There's no way around it. You couldn't have stayed in this long because you're trailing the intermediate term lows, and it's fine because you already made enough points. If you wanted to get in on this one, the only real entry I saw is all the way up here, and I do not like this risk to reward. I do see these areas that suggest that since they're inverted fair value gaps, I would be interested in getting in the long, but it would not be worth it to me at this point. Plus, right here, I do have to ensure that I print past this re-invert the first presented fair value gap. It does come back up and make newer highs. I might try this short-term high entry, which would mean here. But if I'm looking at that, I don't like how the high here is the body of this candle. The high close of this candle is higher than the close of this candle, which I don't like the way that looks. I mean, and then the next close is even higher. To me, this looks bullish. I don't like this. It could reverse, especially with these breakaway gaps. I'm concerned. I wouldn't take this trade. It worked, but I wouldn't have taken it. Having said that, this intermediate term high, followed by this bearish action and this short-term high, would make me consider this one. Now, this would be 543. And this intermediate term high is lower than this intermediate term high. You are absolutely in on this. And I mean, it is a large... that is about 20 points. I don't like that. I mean, I would put my stop right behind it, but I don't like that. But it's not horrible. I mean, it's not horrible at all. See what? Yes. Oh, yes. Oh, yes. That's what I'm talking about. That's why this is the candle to enter, especially since you see it turning red. Boom, you're in that. You take that 543 even down to here. Oh, yeah, it's doing well. Nice 60 points. See how you handle this area here? Maybe you stay in, maybe you get out. Yeah, you clearly are getting out here. Creating new intermediate term lows. Candle structure, I would look to be out of this one sooner rather than later because of this heavy area here. I could let it come back up here to test it, but I wouldn't want to give away all that profit just in case. I mean, yep, no, I definitely wouldn't want to. No, absolutely not. Plus, it's getting to be the end of the day. I wouldn't even trade at this point, probably realistically, but yeah. Oh, wow. See, I didn't even watch that. Here was another opportunity to re enter. So maybe here you get in. But I would start getting squirrely around here, even with my stop loss there. I'd probably look to get out and then look to get in to the next one. Maybe nope. Maybe here actually. If I saw it, if I saw it come up here. Yeah, with this one, no. Honestly, I don't like this at all. I don't like this at all. I probably wouldn't have taken this one. And it's already 350. There's no way I'm taking this trade anyway because I'm not trading MLC candle. Yeah, this is dangerous. I'm not doing that. Yeah, see, it's just not worth it. Plus, it's after 4. No way. And that's it. A little sloppy today, but we had a lot of thoughts going on and a lot to read. So we'll clean that up. We'll try to do better next time.